What's up, y'all? So in this video, I want to clear up all the misconceptions about trading because there are many misconceptions about trading. I have a lot of people who are apprehensive when it comes to trading. I know a lot of people who feels like, trading ain't my thing, it's gambling, you know what I mean? And I understand that logic because I was once in your shoes. I was once that individual who felt like, man, this trading stuff is just too complicated to comprehend at this moment. That's for the guys on Wall Street. That's for the blue collar guys. That's for, the white collar guys. That's just not for me. You know what I'm saying? And the funny thing about it is that's what they want you to believe. If you are currently one of the individuals that believe that, then you already lost the battle because that's what they want you to believe. They don't want you to participate in this industry because you will accumulate financial freedom. And the crazy part about it is, the most crazier part about all this is you already are to trading. You just don't realize it. I hear so many people saying that they are not interested in trading when they already are into trading. I don't get it. You're missing out on a big opportunity. I'm going to tell you how you already into trading. You know what I mean? And that's the whole point of this video, to show you that you're already into trading, to show you how easy trading could be if you let it, to show you that your life can change pretty much if you're into trading. So let's get started. All right, the misconceptions of trading, okay? And there's so many again. The biggest misconception about trading is that it's reserved only for the big guys and the big corporate guys who have money. No, you have something that's called retail traders, and also you have banks. So think of trading this way, okay? Because a lot of people don't understand what trading is. So let me kind of simplify to the best of my abilities what trading is, all right? Don't matter what you're trading. Don't matter if you're trading stocks. This applies to the stock market, the forex market, which is the currency market. This applies to the futures markets, the options market. It doesn't matter. It all works the same way, okay? Think of trading this way. When you're a retail trader, it's like you versus another trader. So whenever you buy or sell a financial instrument, be it stock, currency pair, or whatever, there's someone on the opposite end doing the exact opposite, because you're basically saying, let's say if you're in the stock market, right? Because I use that example a lot, the stock market, because a lot of people understand, a lot of people are more familiar with the stock market. You know what I mean? So for the sake of this video, I'm going to use the stock market. Let's say, for example, if you got a stock, right? Boom. And you buy that stock, right? Or options. You know what I mean? Stock option. You buy that stock option, right? There's someone on the opposite end. There's another trader that's selling that same stock. You with me? They're anticipating the price to do the opposite of what you're anticipating. So it's you versus that particular trader. You with me? Now, think of, they got something called a broker. You with me? And a lot of different brokerage firms. Now, these brokers are basically the referees. That's it. They're refereeing you and this other trader, because you saying that the stock is going up and this other trader is basically saying that the stock is going down. So in order to create an equilibrium where there's no discrepancies or there's no tension because you guys are getting over on each other, there's a referee to be the middleman. You with me? And you pay the referee a fee. These fees are are paid through what is called spreads or commission or slippage. So any trade you enter, once you enter that trade, you're paying a commission immediately. The commission is deducted out of a portion of that particular share if you're buying stocks. With me? So let's say, for example, if you're buying Netflix, a share of Netflix, and that particular share for one share costs you $117. You might be paying $119 to get in that trade. You with me? Because you're paying $2 to the broker. You with me? $2 a commission. You're paying a fee or a spread. It's all the same thing. You're paying to enter the trade. In other words, you're paying to fight. You're paying to fight the trader on the other end who's anticipating that share to do the opposite of what you're anticipating. You with me? That's it. It's like, think of it as a fight between you and another individual. You saying one thing and this individual is saying another thing. Now, whether you win that fight is going to depend on your knowledge. You with me? Because you really are at a disadvantage if you're a retail trader. Because on the opposite side of that spectrum is institutional investors. And here's where your money is being invested in. So when I said earlier that you already are into trading, it's because if you have a 401k, and I'm finna get to that. If you have a 401k, if you currently have a 401k, your funds are being invested into the stock market, into some form of trading. I can guarantee it. If you have a 401k, you're already being invested in the market. If you have a car note, the financing companies who you have a car note with, they are investing your money into the stock market, into trading. I can guarantee you, if you have an insurance policy, they are using the proceeds that you are paying them monthly to invest into the stock market. I can guarantee you, whether it's a mutual fund or whatever, if you have a bank account, these banks, they're using the proceeds that you deposit to invest in the stock market, to invest into trading, period. So, and there's so many other industries, there's so many other institutions, investors that you pay that's investing your money into trading. And the rule of thumb is to follow the big money. If these big institutional investors are investing in this industry, why are you not? That's the bigger question. Why are you not? Why are you not participating in this industry if these big banks, these big insurance companies, these big finance companies, why are you not participating in this industry directly when you already are indirectly? It makes no sense to me. In my opinion, in my humble opinion, you're missing out on a very vital opportunity, because these banks and the people who actually have the money, they're going down this yellow big road, but you're not walking and following them, but you're paying them. You know, you're paying them to walk down the road of success, but you're not able to walk down and participate because of fear or whatever, for whatever reason, maybe it may be lack of knowledge, maybe it may be lack of awareness, maybe, you just not interested. And I get that. If you're not interested, I get that standpoint. But what I am saying is, if you're not interested, the ones that you're paying this money to, they're interested. I can guarantee you that. You understand? So, back to my analogy and my trading analogy. You have you as the retail trader versus the institutional bank. Period. That's what it is. You know what I mean? And I will tell you guys up front, 90% of traders, retail traders, fail in this industry because of that factor. Okay? Because of retail traders, we tend to not have as many resources, not have as much money. So we only invest in $100 or $500 or even $1,000 or $5,000 or whatever. You know what I mean? Just hoping we get lucky. But these retail banks and these not retail, but institutional investors, they are investing millions, okay? So they control the market because they are investing billions, millions. I mean, the Forex market in itself generates $7.5 trillion per day. So that means that these banks are spending trillions in this industry. You with me? So they control the market. So the only way to succeed in trading is to follow the big money. You with me? And here's where technical analysis come into play at. You with me? It's very important. It's very important because you can understand how the big banks work. Now, the big banks, when I say big banks, a lot of people kind of get lost. But I'm not actually saying that the banker or your actual insurance company is actually trading. They're not. They're investing money and letting another trader trade their money. So it's actually institutional traders that you're on the opposite side of. You with me? It's other traders like you who's doing the same thing that you're doing, but they're just representing these different institutional investors, such as the institutional investor. It could be your job who invest in your 401k. It could be these banks. It could be these insurance companies. It could be these finance companies. They have their own traders that trade for them. So they're representing the interests of these institutional investors. They have other traders. So why is that information important? The reason why that information is important is because these traders have a long history of this information. These traders have a well-equipped knowledge about the industry, okay? Don't you know that if you are going to Harvard, which is the top business school in the country, if you're attending Harvard right now, they teach Forex in Harvard. You know what I mean? This goes to show you how top tier level of information this is. All hedge funds, managers and stuff participate in trading, the trading industry in general. You with me? So I said all that to say that these traders possibly attended these big schools. So they have more knowledge they have more knowledge than the retail trader. They have more knowledge than us. So we're coming in the industry with a disadvantage if we don't have the proper knowledge. You with me? So these traders have the knowledge and the capital to control the market. So you have to trade on one accord with the traders, with the investor traders, not the retail traders. It's two different traders. You with me? Keep in mind, as I said earlier in this video, you are pretty much fighting against the trader or the institutional banks who represent or who sponsor the trader. You're fighting against that particular individual. And the brokerage company is like the referee to make sure none of you guys screw each other. You know what I'm saying? And they can collect a fee in exchange for their service. So think of it like that. When you think of it from that perspective, it's easier to understand. You with me? So that simplifies, and I tried my best to simplify what trading is, because a lot of people, they don't get it. You know what I'm saying? And it's okay if you don't, because Hence is why you have me and many others who can teach you this information. You know what I mean? So it's very important that you take part of these industries because you already indirectly are in these industries. You're just not receiving the benefits of them. You know what I mean? You're just not receiving the benefits of the bank investing your money. You know what I mean? But you already are in these industries because you're paying the bank who's investing in these industries. You with me? Follow the smart money. Follow the big money. You know what I mean? Don't follow the little guy, because the little guy is in the same position or maybe just a little further than you. Follow the people who are already down the street. Follow the people who already done walked 10 streets over. You know what I mean? Follow the people who already are in the future. Follow the people who already are at the finish line. Don't follow the people who still trying to get to the finish line. You know what I mean? And that's equivalent to following the big banks. Follow them. Follow them into the trading industry. Follow them into the stock market industry. You with me? Instead of just giving them $500 a month for your car note, you know what I mean? Just take 500, possibly. Take 1,000, possibly. And invest into the stock market. Invest into the currency market or whatever market. You know what I mean? Do what they're doing. Take advantage of it. There's a reason why they're doing it. You know what I mean? There's a reason. So take advantage of that reason. You know what I'm saying? Now, you don't have to take advantage of it. You could just say, hey, Gabe, I'm not interested, which is cool, and I understand that. But keep in mind that that person that financed you for your house, they're taking advantage of it. That person that financed you for your car, that financial company, they taking full advantage of it. You could believe that. You know what I mean? Your insurance company, how long have you had a car? How long have you been paying insurance? I'm guessing if you're over the age of 20, if you're over the age of 30, you've been paying car insurance and having an insurance policy for quite some time. So that means that these institutional investors, these insurance companies that you've been giving your money to every month have got rich already off you giving them your money every month, because it's a proven fact that these industries or these investors control these industries that I'm informing you about. So why are you not participating? Just a question. But again, I appreciate you guys, you know what I mean, for tuning in. And I just wanted to kind of clear up the misunderstandings and misconceptions about trading, because there are many. But we gonna get to the bottom of this. You know what I mean? Peace.